Hello, everyone. Welcome to my channel. Welcome back. And today I have my co-host, Prez the Investor, with me. Hey there, Prez.
Hey, what's going on, Lisa?
Nothing much. So, Prez, you've been picking the topics for us, and this is our third Sunday in a row that we're having a Sunday afternoon live. And for this week, we are going to be tackling the subject of the psychology of investing. So, what made you choose this topic before I get into the definition?
The reason why I chose this topic is mainly because beginners just don't know what they're doing. They don't know that there's a psychology issue. I mean, a psychology aspect involved when it comes to building wealth and investing and or trading for that matter. And I just wanted to briefly touch on some of the topics because I feel it's important to know, like the way you should be thinking, your thought process when you invest your money into an asset or crypto or stock or trade.
All right. So, when it comes to investing, psychology refers to the mental and emotional factors that influences an individual's financial decisions. So, just like with everything in life, there's so many things that shape our thinking and our mindset as we go through life and have to make these decisions and choices. And those are the type of topics, money related, investing, saving. We're going to talk about what obstacles we run into when it's related to investing, and hopefully on each point try to give our insight on how you can overcome these obstacles and improve your outlook on how to be a better money manager, investor, trader, whatever it is, whatever stage you are. So that's just a quick little recap as to what today's discussion is going to be about. So let's start off with the distrust of banks. And I have something I want to share about this from my that went on in my family when they came to this country. But um, so I think we're pretty much past the stage of having money, literally cash money in the house under the bed and this and that. But I do think that most people have direct deposit there, but they're attached to their local bank, and pretty much that's it. End of story. They are not open to uh using online bank for a high yield savings account. Maybe they're not on the point where they're going to a CD or putting the money on one of these investments apps like we would do in order to be getting a 5.1 or 5.0% interest while our money is sitting. So, what are your thoughts on that?
My thoughts. I've noticed a lot of people, even when it comes to actually signing up for a brokerage account, they have a hang up about putting their bank info and their driver's license because of the fear of losing what they already have, the little bit that they already have. It's like
Mhm.
they're holding on for dear life to the little bit that they have because it's in their personal life, there's no room for error financially. I
Yeah.
noticed that a lot, but you gotta just take that step because your money is secure. For one, it's insured. I believe it's up to $1 million per brokerage. I could be wrong. You could fact check me on that. But I noticed that a lot, mainly. That'd be
I
the
think
number
it might
one.
be I think it might be about 250K. But even that is very substantial for many people. I don't think that many people that might be listening to this would have to then split up their money into different accounts in order to
Right.
stay within that limit. Um, when it comes to just saving, I think it's about 250K. But like you said, we don't have that information here. I probably could pull it up as we're talking
Hmm.
if anyone in the chat disagrees with what we're saying. But either whether it's a quarter of a million or a million, still very substantial. And all you would have to do if you have concerns there is to have two accounts. Have an account at Ally and have an account at Discover if you're at those high amounts, but still you'll be able to take advantage of higher rates than you would at Bank of America or Chase or a Wells Fargo or whatever is in your area. So, what do you think? Let's take a look at the chat. Let's take a second to thank everyone for coming in. Frugal Mama, Robert, Ms. V. I'm guessing you guys just both ended your lives. We were watching you. We were here behind the scenes checking out your show before we got started. It's just there's I don't know. I don't know, Prez. Get me on track here, Prez. What's up?
I believe it started from what we were taught in school. You know, the typical go to school, go to college, get a decent job, and save your money. We were told you could basically, we were taught you can basically save your way to $1 million, which is probably impossible due to inflation and the low interest rate that you're getting on a traditional savings account from the begin with.
Mhm. Okay, so we have a comment here about the rates are going to change. So the rates are going to change at the with our high yield savings account. The rates are going to change too, but they will always be higher than um the traditional banks. Like I just named three of them, the Chase, Bank of America, Wells Fargo, whatever, uh and your local credit unions, they will definitely still be less than those. But they right now, I think mine is about my some of my Chase accounts are at about 4.3%. Over the last year, they just steadily have gone up. Little by little, they went up. So it was money that I just would have been leaving on the table if it just would have been sitting at Bank of America, definitely. But everywhere, the rates are going to be variable. So I'm expecting that's why I encourage people that when I get the question or see the question of for my kids, should I just put the money into a high yield savings account and that's it? And I was like, no, you can probably do a mixture. I do a mixture for my daughter. I do that, but I also make sure to invest because the rates are going to come down on the savings, but she'll definitely have a long-term growth of her money that is invested in a different way. So say the savings comes back down to say 3 or 2 point something percent in the next few years, that she could have been gaining over 10 or 20% on some of her investments that she has in her portfolio. So for me, I definitely want to have some cash on hand. So I do a mixture of different things, but taking advantage of a high yield savings account is definitely going to be beneficial in the long run.
My thought process on that is as far as the high yield savings account, saving is for cash that you may need now or in the near future. Now, the cash you invest, that's basically the younger you
Mhm.
taking care of the older you.
Yes, most definitely. And this comment right here talking about he made a penny. That's literally what will happen. And what interest rate are they lending that money out while they're giving you a penny? They're then lending it out or having their, Bank of America credit cards and gaining what interest rate on their money, but not passing on any of that to us.
The banking system is basically a giant pyramid scheme.
Yes, yes, yes. So, all right. So did we kind of cover how do we get past the fear of using an online bank as opposed to your local bank? I'm about not having any cash sitting anywhere that it's not working for me. I have money come into my checking account, I pay the bills. After the bills are paid, whatever money is left, I need it to be moved to somewhere where I'm gaining the higher interest rate. Uh, I don't know if this is something that I need to kind of dwell on. Is there anyone that is completely opposed to using an online bank to gain the type of interest rates that are available, as opposed to you need to physically go to the bank? And because I think I've overcome all of the obstacles. I have a money market account. It has a debit card that is associated with the account. So, I do keep some cash on hands, that I could go to my local bank to get money, but not a huge amount. And if I run into a problem, I can probably use my credit cards or figure out a way to get past the 2 days that it might take for me to transfer the money from my Discover account to Bank of America. But in the long run, I feel like it's been worth it for me to have made that change. So, do you want to share where you keep your money that has a higher rate than it would at your local bank?
As of right now, I'm using two different banks. I'm using Chime and I'm using Ally.
Ally. Okay. So those are a few things to consider as far as banking alternatives if you've been a person that's just been uh, using your local bank all along, or your local credit union. Take a look at the interest rates. Maybe once we get a little further into the show, I can actually pull up the calculator to show you what you're really missing out on. But like the comment I showed a minute ago, you will be take a look at your account. If your interest rate is 0.01 or even 0.15 as opposed to 4.0, 5.0, it's a huge difference.
A
All right.
huge
So
difference.
let's move on to misconceptions about investing versus trading. I did a video about this about a week ago. And I want to talk about the gambling mentality people feel about options, as well as some people even investing, that they feel that it's a gamble. President, do you want me to share first, or do you want to go ahead?
You can go ahead first.
So, and I'm not a gambler. I'm not so I might mess up this analogy a little bit, but if I went into the casino and I went to the roulette table and I went and I put, my money on 14 black or something, I could lose all of my money. But if I looked at some analytics and used some tools and decided I wanted to get into an option trade for a particular stock at a particular price, and I went and ahead and purchased those contracts, or even one contract, and then as soon as I purchased it, I put on a stop loss of 10%. This is, to me, is not a gamble in the way that if I go and I pull that slot, or I put all my money on a particular thing at the casino, you can lose 100%. I am making strides when I do, and whether it's options trading or regular trading, I'm taking the steps to make sure that I'm getting into it already with the decision of, at the most, if this does not go the way that I think it will, the most I will lose is this amount, because I have my stop loss on. And I think that people need to do some research and legwork and have an understanding of this and make sound investment choices, because some things you're going to have to ride the wave with them, but in time, the whole S&P 500 or certain investment choices, if you hold on to it long enough, you're going to have your down years, but you're going to have more years of growth than of loss in the stock market. So with that, when I think of it from that perspective, I don't think of investing as a gamble. There are investment choices that I feel people will make and do make that are complete gambles, especially without a stop loss on. Um, so that's my take on people's mindset when it comes to investing versus gambling. And like last week we were talking about building a portfolio, and with that we were talking about the sound choices that, a beginner, we were doing basically beginner investing choices that really you can't, most likely in the long run you're not going to go wrong with. But if you're taking
Exactly.
gambles, it's a different story. So share your thoughts, Fres.
My thoughts on that is basically what Lisa just did is gave you the definition of what we call risk management, because the last thing you want to do is go into an investment or a trade with the idea that it's going to double or triple overnight, and you see that it doesn't, so you have that hope and that prayer that it's going to come back, and the whole time you're watching your cash just slowly bleed away. And then you're asking other influencers on YouTube or wherever you got the info on this particular hype play, what I like to call it. You're asking them for advice. Should I sell, or should I hold on to this? Should I buy more? And that's really not the way to go. The best way to go is to have a long-term mindset first and foremost, because like I said earlier, it's the younger you taking care of the older you. So you want to have that out the way first. Now, to add a little bit to that, that's when you actually take the time and do your research and learn how to trade with proper risk management.
Mhm, mhm. And what you just touched on about, you might be following a particular influencer, or you might hear something at the gym or the whatever, your coworker, whatever, whoever, wherever this information is getting to you, you got to know exactly. I guess I didn't use those words, but yeah, you gave me the words. Those are the words that I always use, is risk management. You have to get into things with a plan of, when are you going to get in? When are you going to get out? What is the price that you want to purchase at? What, just like I was saying to Robert last night, if Bitcoin was to come down to 57K again, that is where I would go heavier. But I already have a written plan on what I would do for certain, whether it's stocks, ETFs, whatever it is. I have a plan of what is too high, where I would want to, if it, I have a whole strategy of, is it an investment? Is it a trade? That's step one for me. Then if it's an investment, I just have to know when I want to invest more heavily into it. It's always going to be one of my monthly or weekly investments. But if I see a price I like, I'm going to go heavier, and I have to be prepared for that. That's why I have to have cash on hand. But if it's a trade, where am I buying? When am I selling? I'm going to have alerts on and notifications, and make sure that my risk management is there, because I'm not in this to lose money. And I have to always have a plan and a strategy in place from the start, as soon as I get into it, because I'm not gonna, I've made my mistakes in the past. I can share some details on a mistake that I was just talking about earlier, but I've made my mistakes, and that's why, I love having these type of conversations, and being able to share it with you, the viewers, the subscribers, because I'm a person that, if someone else made a mistake, I'll take a minute to listen to it, because I don't need to make all of the mistakes and lose money and go through any grief. I can take their story under advisement, and maybe say, okay, listen, I heard this girl Lisa made this mistake. I don't need to do that.
Exactly.
So I think we've kind of tackled that issue. Let's take a look at the chat. Is anybody making any comments about the gambling aspect?
I don't see any.
Okay. All right. So what's the next
Y'all know
point we're
y'all like
gonna
to gamble.
No, I mean the confusion. I mean, it's not like I've only done it once in my life. I played a couple of slots, but I've never been one to do the tables. I never dabbled with that too much. Just I don't have the nerve for it.
Me
Playing
personally, I tried going into the casino once, and I lost it
once.
all.
We're both talking about once. Once
I
is enough
lost
for
it
us?
all. Actually, I went twice in one day. The
Mhm,
first time I went in there and I won a little bit of money. I left, I went and got something to eat. I came back and lost everything just
mm.
like that within 15 minutes.
All right. So
I felt
talking
awful.
about within 15 minutes, I don't
Yeah,
I'm not gonna ask what that dollar amount was on that everything, but I'm hoping that it wasn't much.
it wasn't a lot, but at the time for me, it was a lot
Yeah.
because it was everything.
Uh-huh.
So it wasn't a lot. It wasn't thousands of dollars. It was like about $100. I think
Oh,
maybe a little more than $100, but it was a lot to me at the time. I felt awful afterwards. Like I could have just kept it in my pocket.
yeah. Oh, I wanna ask how is your stepfather doing on his first, I don't know how long it's been now, his first couple of weeks of investing?
It's been 1 week so far. It's been 1
1
week so
week.
far,
1
and
week.
everything is automated. It's been going to into VCI so far, and
Alright.
it's a little red right now, but he's ready. He's showing conviction and consistency so far. So
Alright.
so far so good.
You had us on the edge of our seats because we didn't know what you were gonna say, and then you were like, "My stepfather is gonna do dollar cost averaging." We was
Yeah,
we did not know what you were gonna say. I was thinking, "Oh, is there gonna be some new addition to the family or something?" I didn't know what was coming next, but
no way.
that was a great share.
Yeah.
And I'm gonna continue to ask how dad is doing over there.
To me, it felt like it was an accomplishment because when I first learned about investing and trading, I felt like you ever seen the movie Chicken Little? How he was running around talking about the sky is falling, the sky is falling. I felt like that. Like the sky is falling. This where the money at. Like I'm
Uh-huh.
showing you where the money at.
Uh-huh.
And
And
everybody's
you
like,
you just wanted your whole family and friends
right,
to come along with you on the journey
right.
because you were so excited and they're just not feeling it yet, right?
Because at the end of the day, it would motivate me personally to stay consistent on my end. It's like they will be holding me accountable silently because they're going to be asking me questions like, "What do you think about Nvidia?" or "What do you think about the market? What do you think the market is headed? What do
Mm,
you think about Ethereum? What do you think about this?" I don't get that. I have to reach out to social media for those type of conversations. It's like I try to bring that conversation up at the dinner table, and they looking at me like, "Is that all you want to talk about? Is what the
it's what
S&P doing?"
Yeah, that's why we have the Discord, that's why we have these, our comment section on YouTube, because that's where our people are, right?
Exactly.
Yeah, yeah. Um, yeah, Neil's talking about that he has a couple of positions that give him stress in his portfolio. So, last week you touched on how do you what do you keep the most speculative, positions in your portfolio? What percentage do you keep those to?
As far as speculation, if you would if we can refer to my pyramid, the top layer, level five, I call it level five. That's a total allocation of 5%.
5%.
So if you got 5 different speculative assets, that's 1% a piece, or however you want to do it. You could just have that one particular asset at the top of that pyramid, and it just be 5%. But no
Mhm,
more total than all of your investment holdings it shouldn't be more than 5%. That
yeah.
way, it takes out them late night stomach aches. How's my investment doing? You're not really worried about it as much because it's a smaller amount compared to the money you already have working for you in higher quality investments.
Yeah. So Neo, if you wanna share with us, do you have a stop loss on, and are you keeping the percentages small, with these, investments that are kinda giving you a little, stress? So what are we moving on to now? Oh, I
Right.
did do a poll talking about something else I wanted to touch on. Let me just share real quick. Uh, share screen.
He made a comment. He says, "I didn't even check. Whatever money I had at the time, I put in. When it dropped, I kept adding money to lower the price per share. LOL. No stop
Mhm.
loss. Totally off the cuff.
Mm,
What
okay,
would I
so
do? Not financial advice, but when it gets to that point, because I was in a bad investment like that, and I did the same thing you did. I continued to try the dollar cost average to lower the average down. You have to basically look at the fundamentals and do some soul searching within yourself. Like, is it time to cut this loss and allocate this money somewhere else and try to gain it back that way? Or do I continue to watch this sinking ship?
mhm, mhm.
And that's when you come to the decision of cutting your losses then, or to stand in the boat that's sinking. And I wouldn't recommend that at all.
Okay. So this is a poll that I asked about where do we learn about financial literacy? And let's see, it was pretty much books, Discord, and podcasts all came in pretty high, but other also came in there, but I didn't really get any information on what the other sources were. Um, so
Mm.
w- lack of financial literacy, that makes many people that has left many of us uninformed on how to go about this in our adult life or even younger, trying to even help our children. So, what do you think? Because it's still not coming from the school system. What do you think that we can do to just lessen the hesitation that people have about learning about investing? Where is the top place that you've learned about your investing and trading strategies?
My top place was right here. YouTube University was
Mhm,
right here. Um, I watched a lot of different content creators throughout my years in this journey, and you pretty much got to take a little bit from each one because they all provide different types of value. You can't just limit yourself to just my channel or just Lisa's channel or this person's channel over here just because they have a larger following. You have to take what you can get out of each one of the content creators because they're all providing a different type of value. And I noticed another hang up that a lot of people have is it's a lot to take in. But I look at it like this: if you really want financial freedom, it's not going to come easy. You got to put in that work, even if it's just 30 minutes a day to watch someone's video or two videos or three videos and take notes. And then you you look online for the different sources that they're bringing, that they're presenting on the screen, and you can read it for yourself or take screenshots. It's just basically no excuse. It's no excuse. If you want it for yourself, you'll put in that hard work and time and dedication. Because how I spell love is TIME. If you love something, you're gonna put that time in to achieve what you're trying to achieve.
okay. So I want to share this. This is a trade that I was this is something I invested into without having a mindset of it's a trade some years ago. So it was Jaguar Health. And wow. Hmm.
Falling knife.
Yes, yes, yes. So a few years ago, I'm not sure when, uh, probably must have been around here. It was $4. I had gotten into it at $1 and it went up to $4. And last I look, it was 10 cents, but now I see it's at 8 cents. But I held it from $1 to $4, but I didn't get into it with a strategy, a plan, watching it as it went up. I could have had that all of the profit from 1 to 4, but I was not experienced and I did not have a plan and set on what my strategy was with this and a few other things from a few years ago. So I just wanted to share that as a quick example of a mistake that I made, just getting into something like, oh, everybody's buying this. And I'm assuming at that time they might have had like a development, something approved, a FDA approval, or something happened that really made the stock price go up significantly. But with that, I needed to know that this is the time to sell. I didn't have a plan on when I'm going to sell. And I lost the profit. I lost the majority of the profit that I would have made if I would have just got in, knew when I was going to get in, and knew when I was going to get out. So now that I've learned that, and as a beginner investor, you don't have to do all of these things. You don't have to trade. You don't have to invest into random things like JAGX that may have never even heard of. You can stick to the basics. If you don't want to put in the
Or
work,
Rumble.
yeah, Rumble, that was if you don't want to put in that type of work to do trading, know that you don't have to. But if you are going to dabble in trading, I want to just mention, do it with a strategy. Do it with how uh Prez nicely used the words that I wasn't using. Do it with the proper risk management so that you're gonna be on the winning side of it, or at least have a small loss. There are in the apps that we use with our trading and our investing, we're mentioning a stop loss if you don't know what that is. Prez, you want to talk a little bit about a stop loss and the percentages and stuff, how you mitigate your risk when you are doing a trade?
Okay, a stop loss is basically a feature that the broker provides for the investor to where as though once he purchases the asset, he can set a sell order that if the particular said asset drops below this price to his stop loss order, then it will automatically sell with a minimal loss to wherever you, the person that's investing into this asset, sets a price. Like, for example, you buy something for $50 and you say to yourself before you buy it, I'm only willing to lose $5 out of this 50. So you set the stop loss at 45. So if it drops down to 45, then the trade will kick you out and you will have the $45 and your buy, into your buying power.
Mhm, mhm. Yeah, and I've said this before. Yeah, I'd rather my story be that I lost 10% of my investment than I lost 60 or 70% and I'm over here, stressed out, hoping that it goes back up. I don't want that scenario when it comes to my trading or investing. I don't need that stress. It's not something that I want to be a part of my life. And if for some reason it drops down 10% and I am still so inclined that I need to continue to try to chase whatever particular investment, come up with a new strategy and buy back in at a lower price and see what you can do from there. But hopefully, if you do things like that, you're still lessening the total loss that you can take. Now, with
Exactly.
investing, we're not always going to do with trading at least, you're not always going to do it right. With investing, hopefully, you over time, over a long period of time, at the end of the road, it turns out that you did it right, and you're not retiring when you were at a place of a huge loss. You're not retiring in 2008 when the stock market is, so with that, hopefully you adjust your investments to match up with where you are in your journey so that you make yourself more conservative and you are in a good place depending on where the economy is. But overall, I just want to see people win and not lose the opportunity, not lose out on the opportunity of what having your money invested long term can do. So,
Compound interest is the eighth wonder of the world.
yes, yes, yes. So, Neil is saying I probably should use a stop loss. Thinking about it now. I hope what platform do you use, Neil? Because um I I this is something also I put in the work is to navigate the apps and, start small with what you're doing. And if you have open things out there that uh you can implement this, you go in and test it out, definitely. I would say the app that I know how to navigate the best with, picking up an option, just buying my, having my recurring deposit and an investment is and everything like that is Webull, because I have investments that are made automatically there. Like for example, I have my daily Apple that it does it by itself,
Mhm.
finding my options and stuff like that, putting on my stop loss. It's
I'm basically the same way. It's
yeah.
very user friendly for me, and I can also use that chart on my desktop as
Mhm.
well as use the app on my phone. So it's pretty much seamless.
Yeah.
And he says Robinhood, Charles Schwab, Chase, and Ally.
Yeah, he has a lot of accounts going on, but yeah, I would encourage you to explore that and maybe having a plan that doesn't lead to stress or loss in the things, especially if they are speculative. I don't, we're more so concerned about losing out on the gains, but we got to look at the other side of the picture too. So that's what really matters. We're all going to be happy if we make money, but um we got to admit when we're making choices that is leading us to lose money, and that's what we don't want. So,
My thought process on to reply to Stacker once again. My thought process on overstaying my welcome in a bad trade. You just gotta let it go. like the song say, you just gotta let it go.
mhm.
If it's keeping you up at night and giving you have your stomach doing flips, it's just time to let it go, because you can put that same money into a whole different trade and triple it. You understand what I'm saying? Versus, is this trade going to come back? Is it ever going to come back? Should I put more in it? Should I try to lower my cost average? If it gets to that point, I just let it go. Me personally, it still happens to me with some of my speculative investments, like your charging stations and your uh, let me name one, Plug Power. Like, I had read the business model on Plug Power, and I was like, sold. Like, this renewable energy is going to be the next big thing. But
Mhm.
if you look at the share price of Plug Power now compared to 2 years ago, you'd be like, wow, I hope you're not still in this one.
Yeah, I
Then
still
on
have
top of that, you have to learn how to be able to understand the financials of these particular investments. Is this company making sustainable profit? Because a lot of these companies that are new, and the business model may seem good, but are they making profit, especially through turbulent times in the economy? Can they withstand the bear market, basically? If they can't, then it's a trade. It's not an investment. You get in, you get out.
okay. So I like this comment. Hopeism is not a strategy. Nope, we
Hopium.
got it. Hopium.
I call it hopium.
Hope going like this is not a strategy. I
Not at all.
agree. I agree. But I don't want you to don't not invest because you think there is no way for you to come up with a strategy, because there definitely is. So, what's
The
up
sooner
next?
you grasp the fact that you will lose sometimes, the better you off will be in your trading journey.
Mhm, mhm.
Now, the next thing after that, once you grasp the fact that you will lose sometimes, you have to minimize how much you're willing to lose. It's not about how much money you make, it's about how much you actually keep.
Yeah. But it's all about mindset and what your examples were growing up, because just like I said at the beginning of the show, these are the things that are going to influence you throughout life, including your money mindset. And I know growing up, I didn't have flexibility with having, uh, money for a video game or clothes or shoes or those type of things. So when I did have my own money, I think that those were a higher priority to me than they should have been at times, because I always wanted them. I always wanted to be able to have certain things, and I couldn't have them. Um so all those little things are gonna shape what you're doing, as well as what you see going on in your own family, in your household, and the things that are not talked about, because there were some family members that were making strides in investing in real estate, but I just didn't know what they were doing. I'm just getting my eyes open to their accomplishments now as a very grown woman. I really just, we weren't talking to each other and sharing the knowledge. And I don't know why, but I wanted to end. And I definitely I've had two of my cousins on my channel before, just talking about like what is going on in our own family, that these things are happening. How do you feel that the way you grew up, did you have any example of saving and investing, or I know you've only mentioned about you've
I'm
mentioned
gonna
with
give you I'm gonna give you a typical mindset scenario. Okay. Yeah, financially stressed throughout the whole year. You know you have this lump sum coming up. Now you haven't been able to go out and party. You haven't been able to buy the nice clothes you want. Maybe you wanted a new car, you wanted some new furniture, what have you. So you get this lump sum of money, right? The way you're thinking in your mind, I owe it to myself to treat
Mhm.
myself. So now that money is already gone before you even received it. When instead you could have put that money to work. You could have had a plan set in place. Like, okay, I'm going to take this money and I'm going to break it up into little sections and I'm going to put it to work a little bit at a time versus I'm going to treat myself because I owe it to myself. No, you owe it to yourself for the younger you to start taking better care of the older you. Because once you get old, they don't know you.
Mhm. Agreed, agreed. Yeah, I definitely went through those stages of, we all know that Christmas is coming. We know the birthdays, we know the certain events that we're going to need money for throughout the year. We know when that tax return is coming. And it's just, yeah, prioritizing or having a good money mindset from the start so that you can be a better planner and not give in to all of those wants, and realize that you have to have a long-term strategy when it comes to saving and just getting ready for all the things that come up. Um, so maybe we could talk a little bit about, like I said, the title was Investing, Philosophy of an Investor, but I figured the conversation would kind of touch on a little bit of other money aspects. So, I never use this word, but I hear it a lot on YouTube. Sinking funds, having different accounts for different reasons. Do you do that? Do you have like a emergency separate from your car, separate from entertainment, or do you kind of just do it all together?
I tried it that way, but it was a bit tedious for me. So I just
Mhm.
said, look, emergency is emergency, responsibilities, responsibilities. And if I'm saving up for fun, that's what I'm saving up for. I guess you can call it a sinking fund because I got three different, type of savings. But
Mhm.
as far as I got this labeled as that and this for that, no, I'm not doing all. I don't. Me personally, I don't need to do all of that. I
Yeah.
can pretty much stay on top of my finances without all of that extra work. I can be using that time to bring you guys a more value. You understand what I'm saying? Versus me worrying about this fund and that fund. I'm not saying there's anything wrong with it, but for me personally, it's a bit much. I'm a guy.
Yeah, it's just as long as you have the money to cover, you don't need it to be
Right.
labeled this, that, and the other.
Right.
Um, so yeah, I think that I know I think that my family, because of the just the situation that we were in. I mostly grew up in the household with my mother and my grandmother, my mom's mom. Most of my life, it was the three of us until my mother had gotten married, and then she had my sister. My sister and I are 19 years apart in age.
Okay.
Uh, so it was a long period of just me and grandma, me, mom, and grandma. So and they were both, not no higher education, working in a warehouse, working in a nursing home, helping the people. Um, so all of the money, and they made it a priority that I was going to go, or my mother made it a priority that I was going to go to Catholic school or private school. So I think all of the money was spent. Like there was nothing left. I didn't when we ran into an issue, when there was car repairs or just even growing, and kids grow out of their clothes and need things and uniforms and all of that. It always seemed to be a money stress, in our household. So with that, I just always from a young age, I was always pretty much kind of worried about money, and just trying to make sure that I was able to feel like I wasn't gonna be made fun of and present myself the best way I could when I went out of the house, because, I assume other people had more flexibility with being able to buy clothes and have those certain sneakers and get their hair done more often and stuff like that. So, um it kinda led when did become an adult. I think it kinda let me want to be more flexible with certain expenditures, because I had gone so long without really having them. So,
Hmm.
I had to break myself out of that, I like to do certain things, and I couldn't afford them, but I wanted to do certain things to a little bit of a higher level, because like you said, you feel like you deserve it.
You
You
owe it
feel
to
like,
yourself.
yes, you owe it to yourself. But I've kind of gotten past that now, and I try to do everything as a mix and just try to make sure that there's a balance. I'm not gonna spend money on vacation or treat myself to something, extravagant, uh, if I don't have all of the money. And I've been like that for quite a while now. Even if it was something that I wanted, that I had to put $50. I used to use my credit union more often, for saving for a long-term thing. If I had to
Hmm.
say I have to do $50 every other paycheck for however long before I can get to the money, this is how I saved up for a particular handbag that I wanted, but I did it. And when I made the purchase, it was paid in full. And at least that was a step for me in the right direction, as well as where I'm at now with being more, uh, concentrating more on my investments for the long term, because I want to be able to tap into them, and I want the dividends, and I want to see my accounts building and growing. So, um, I guess that I overcame that obstacle just by maturing and just looking at the big picture of what really matters to me. So, is that something like, do you feel like you were kind of the same as me? Like you had to overcome the
Exactly.
enthusiasm, like I'm getting my tax return, or something like that, and say, okay, now when you get it,
I'm victim. I'm a victim of having an "I owe it to myself" mentality. Yes, I
Mhm,
am.
mhm,
But what keeps me out of that way of thinking now is I always think about where I was financially when they told us we all had to stay in the house, how unprepared I was financially. And I don't
mm.
ever want to be there again, ever, because I'm relying on the government to take care of me now. And as we all can see, they really didn't do anything.
So with that, thankfully, I just was able to shift to 100% remote work, so I didn't have any interruption, I'm still with the same company that I was with the whole time prior to lockdown and still now. So, the only shift for me was, 100% remote for a long time.
Mhm.
Um, but, I was scared because I was the newest person to the department, to the company. So I was like, if they do decide to let anyone go, I think I would be at the top of the list. But it worked out. But yeah, I wish that I wasn't so fearful at that time because that would have been a great opportunity for me to invest more heavily, but I wouldn't do it because I was like, if I get laid off, my unemployment is not gonna be enough.
Mhm.
Maybe it would have been because there was a lot of stuff that went on as far as unemployment with that also, but I was just fearful and just, took things slow, and we were all fearful, I would say, because we had never gone
Yeah,
through that in our lifetimes. So it is what it is, and it's like we always jokingly say, if we could go back, we would have done more, you know. So
exactly.
yeah,
Shoulda, coulda,
but
woulda.
yeah, it is what it is. Um, so can you think of any other things that come to your mind when it comes to our obstacles and our struggles with having a good philosophy when it comes to investing? I think that another obstacle that
Patience.
patience, yes. Uh,
Patience.
Let me just say this before you continue. I think that some people have not invested steadily, regularly for, let's say, 10 years or 15 years to see the results. Uh, and that is what's holding them back, that if they could see that's why I try to share some of my accounts sometimes. I don't know if it or share the investment calculator. I want people to really know that they in the long run, you have to give it a chance and be consistent with adding to your investment account, with raising up your 401k percentage that's being, invested, and you will see the results in the long run. So, what are
It's
your
kinda
thoughts?
like raising children.
Mhm,
I look at my investments like I'm raising children. Like these are my babies. I gotta take care of this one. I gotta take care of that one. I gotta give them time to grow and have their own space to room to breathe and the things of that nature. But you gotta take calculated measures to do your own research on these investments, and you have to use proper risk management. You have to be able to determine what's an investment and what's a trade. You have to have a exit plan. It sounds like a lot, but do you really want to rely on the government to take care of you when you're 70, 80, 90 years old if you're blessed to see those ages? It's like you got to be willing to put the BS to the side and put your feet to the ground and get started on your investment journey and stay consistent with it.
mhm. So, we have a comment here from Henry. Henry has been focused on his investing for 45 years, and he's saying it's looking pretty good. So that's what I want to see all of us getting on track with, and people in their 20s, um, knowing, like you said, compound interest. You can't contribute what you can at 25. What you start to do, your contribution at 25 is drastically different than what you will need at 45 to get to the same outcome at 65. Most of us cannot keep up with the investment that's needed at the age of 45 in our retirement planning. That's why we need to start early. Even if it's small, we still need to start as early as possible, because it's the smaller the smaller investment goes a long way. So don't think that it's not worth it. And in time, continue to increase it, and you will reap the benefits of making that commitment earlier on in life, because we see so many people that waited too long and now are realizing that um, Social Security and disability, or whatever they have, is just not going to be enough, and to sustain a reasonable lifestyle, especially with this economy and the way that inflation is coming in strong waves and just beating us down. I know I went to the supermarket. Sometimes I see things and I don't even put in the work to figure out why. Why was a tray of 30 eggs at the supermarket over $11?
Wow.
I just nodded my head and just bought it, and I'm just telling my family, like, we have to be mindful that this we got to make sure to I'm like making meals, and I don't want the meals to waste. I want every last piece of chicken and every last egg to be eaten, like, because I'm trying to really make sure that I'm being mindful of my spending, and it is just it blows me away sometimes. And we've all, I think most of us, we've definitely gone through the gas prices have gone so high, the groceries, the car repairs, the car insurance. It just seems like everything is just going up at a much higher rate than, of course, our income. So it is what it is, but I'm just here to just continue to make whatever adjustment I need to with managing my budget and my finances, because I tell you, this is what I came up here to share, is that my investing will never stop. So um, it has to find a way to keep it a priority. What's up?
I said, yeah, I'm agreeing with you. It won't stop.
Mhm.
It's a minute to win it until I
Yes.
can't breathe anymore. I'm gonna always
Mhm.
invest.
Yes, yes. Miss V is agreeing with me. I guess she's saying everything goes up except for our paycheck. Yes, it does. So, does do you have anything else that you want to chat about today? Do we have any suggestions on future topics from the chat or from you, Press?
I'm sorry, I was muted. Or questions?
Do you have anything else that you want to cover? Do you have any thoughts on any future topics that you want to cover? And I was also extending that to the chat. Is there any topics that you would like to hear from us?
Okay, to the ones that are 45 and older. You said something about the contribution amount that you needed to get to where you're trying to get at the retirement age. The way to catch up with that is just simply learn how to trade with proper risk management, and that's your shortcut right there. The stock market is basically a magic money printing machine, and once you actually learn how to trade and you combine that with long-term investing as well, the sky's the limit. I'm telling you from my own experience and from watching my peers show me their progress, the sky is basically the limit.
So You're saying, okay, so what type of trading would you have someone do as a catch up? Because I don't want people to get in over their head. Can you elaborate a little bit more?
Elaborate more. I would say, I trade options, of course, and I
Mhm.
also actually buy the stocks from time to time. But that's where I say proper risk management comes into play, and you got to be sure that you're not over allocating yourself in one particular trade. You're not putting all of your money into one trade. You don't want to ever over allocate yourself and over leverage yourself, because that's when your psychology starts playing with your mind, and it starts going the other way, and maybe it'll come back because you got more skin in the game and you don't want to lose, but you end up losing more than what you planned to lose from the get-go. So that's not the proper behavior to start off having. You basically got to learn risk management first and foremost, and that plays a lot onto what your thought process is and your overall psychology, because you already know, one, you're going to lose, and two, you have to minimize how much you're willing to lose.
Okay. All right. So something I wanted to talk a little bit about. My family, when they came, I'm the first generation born in the US. So when my family came to this country, something that I would see them do, um, is they called it a partner. So what that was is that you would put in your this is kind of their kind of a like to get a loan kind of method in order to get like a lump sum of money, whether it was like $2,500 or $5,000. Each person, they would have a whole list of people. Each person would put in their hands, their amount of money that they were, committing to for the week, and then they would have a schedule of who would get the money that week. And I called my stepfather about this in preparation of this show, because I remember seeing him and my grandmother doing this. So,
Mhm.
I was like, "But, weren't you scared doing this? Weren't you scared if the banker, the so-called banker, the person that held all the money, the person that we brung all the money to, and then would give it out week by week to the people? What if the banker took off with the money, and what if, someone died or couldn't work anymore to continue to put in their money?" And it never happened to us that something like that happened, but I was just like, the things that we had to, well, not we, because I was a little girl at the time, but the things that people have to go through in order to try to build wealth, and just try to get money together to whether it was to rent an apartment, have some get some money together for a car or to buy furniture. As I was asking him that too, like, why were you guys doing these things? But it was a way for them to get a lump sum of money that they weren't going to be able to get a credit line. They were just coming here and getting started, and I think there's different cultures or different islands call it different names. So I was talking to someone else about it, and they said it was called susu, which I had never heard of before. I just call it partner. Have you ever heard of anything like this, Press?
Never.
Does this sound weird?
That was interesting. I was like, huh? Like, what if he, before you even said it, I said, what if he run off with the money?
Yeah, yeah,
Then
but
what? Everybody gonna be looking like, huh?
but like I said, thankfully this worked out, and I even remember, well, probably even to the point when I was already driving, when I was in my later teens. I think I even remember having to go on Friday night to go drop the money off to the person that was
Mhm.
the banker, because, so it wasn't something that my grandmother and the family used. Definitely when they first came to the country, they were using this method, for more than 10 years into their being here in this country. But yeah, I don't know
Wow.
if anyone else from other countries has had that experience, but that was um, that was a way of that we used, that we implemented, that they were thankfully did it in a safe way. It doesn't seem like anything that I would do.
Can I ask where's your family from?
Jamaica.
Okay, okay.
So,
That sounds
but
like something that I would hear from that island, that particular island. It's a lot of traditions that I just don't understand. I don't have anything against them or anything,
mhm.
but there's a lot of different traditions that I hear about people from various islands that like, huh? Like y'all really do that? Like, wow.
But the whole point of me sharing the story is that, they found a way. They found a way to get an influx of money, a larger amount of money in order to do what they needed to do. So that was a way that they were able, not a way that I would encourage anyone doing, and I'm glad it worked out, but just something that crossed my mind, and just memories that came back to me of how I saw my stepfather when he came to this country doing, and my grandmother prior, years as I was growing up from time to time doing, in order to be able to do the things that we needed in order to get us a new car, or something larger that we needed in our household. But yes, so today's conversation, I don't know if anyone has recently come in, has been about uh, money mindset, evaluating our psychology is related to money,
Mhm.
investing, trading, and overcoming any obstacles that we have when it comes to these different things. And I think that personally, I think I've overcome all of my obstacles. I get into my investing. I get my, whether it's my investing, trading, savings, I think I have um a clear mindset, mentality, goals, on how I'm going to achieve everything that I want to accomplish. And of course, I like to stress with risk management, because I don't want people to think that they have to do this and they can potentially lose what they have, because I know that that is a huge concern of not losing what little, the way you put it, Prez, not losing what little we already have getting into this. You don't want to lose it, especially if you feel
Right.
like this is all that I have. So
The
I don't
best
know.
way to cure and in closing, the best way to cure the mindset that the typical beginner or potential investor has is to educate yourself. It's like the information is out here free on this platform alone. Mainly you can just come to YouTube if you want. I would not recommend just doing that. You have to actually go on these companies' websites and just read and make comments in the different creators' video comment section and ask questions. Like we'll respond to these questions that we see, because we know how it is when you're just starting out and you don't know what to expect and you don't want to lose all of your money. I'm gonna say that on as far as losing all of your money. If you're making the safer investments, unless you're betting on the failure of human civilization, the stock market is always going to go up. The economy is always going to progress, and civilization is going to keep progressing and advancing until it's time for it all to end.
And let's hope the end of the world is not coming anytime soon.
Right.
So, okay. So one last question before we wrap it up. So without naming any names, because we both said that YouTube has been a place that we have gone to for learning, for education, to build our knowledge. Um, what are some bad, or some uh I don't know how to put it. Without naming any names, just let me know, what are things that you've seen on YouTube that you would not encourage people to follow? I think that we touched on how I was saying you have to know a price point to buy, to sell, to get out. What is an investment? What is a trade? I think some people are up here mentioning things with no strategy. So what else would you discourage people from following if they're having a mixture of financial YouTubers that they check out?
If you're a beginner, just stay away from the hype. Stay away from the hype until you learn this game.
Mhm,
Just stay away from the hype because you have a lot of influencers out here that will say sheep going to 1 penny or um, Bitcoin going to 200K in the next 3 months and things of that nature. Nobody knows. Nobody has a crystal ball. We don't know where these prices are going to go, to be honest. So we got to go back to risk management. Be careful and on how you allocate your actual investments. Go the safest way possible first, and then you can. By then, you'll have enough knowledge to learn. Um, if I put a small amount into this hype trade, I can make a substantial return. And I also know I'm not willing to lose, but so much of this money that I have allocated into this hype trade versus, oh, you see this influencer on YouTube and I'm gonna go ahead and cash out my life savings and put it all in because he said it's gonna 10x. And then
mhm.
you're looking 3 weeks down the line and you still in this trade and you down thousands of dollars and you're wondering why. And then you're making your own hate videos on this said influencer on YouTube, telling everybody that he's a scammer and things of that nature. When the whole
Oh,
time the only person to blame is you because he didn't tell you to buy. He didn't have a gun in your head telling you to click that buy button or anything of that nature. You the one that made that bad choice to get into that bad investment because you wanted fast money.
all right then. And if you guys didn't know, Prez's beginner-friendly favorite investment ETF choice is VTI. So if and VTI is the total US stock market as opposed to a bonk coin or something that you've never heard of.
Pepe.
That yes, things like that. But okay, guys, so please if you're not already, subscribe to Prez's channel. He just started a new channel earlier this year. So we are on the road to his first 100 subscribers over there. So check out his channel, subscribe if you enjoy our collaborations, and check out his content. He's building a portfolio where he invests as little as $5, very beginner friendly. And please drop us a comment and let us know if there's any topics that you would like us to cover for future uh Sunday afternoon or whenever we have a chance to come back with another live stream. And I will be checking in with Prez if there's any topics that he wants us to come back with, because I put him on the spot last week at the last second and was like, what are we going to do next time? And he did come up with this topic, but I'm not going to do that this time. You'll have to see what it is when we post it in
It's
our
a surprise.
but yes, please drop a comment if there's something that you would like to see us cover. One question here. We have a question. VTI to invest, SPY to trade. Is that right, Prez? I agree with that statement.
I agree. I totally agree with that
Yeah.
one.
SPY, the expense ratio is a little is higher. So I don't see the point in investing into SPY. I think we both agree on that. Yeah.
Right.
Yeah.
It's just a
Okay.
fast moving vehicle for printing money.
And we have someone that wants to be a guest. You'll have to email us and we can have a conversation about that. I was going to extend the invitation to people that we knew. Maybe we can do that sometime around. But yes, please introduce yourself to us and maybe we can have a conversation about that. Is that okay with you, Press? Did you ever see us having additional panel guests up here with us?
We're gonna
We
have,
can
we're
talk
gonna have to
about that.
charge them. We're gonna have to charge them $5.13.
What kind of number is that? I don't get it. But, all right. All right, guys, have a good rest of your weekends, and thank you, Press, for
See y'all next week.
being an awesome co-host always. Take care, everyone.